Sir, I distinctly remember on the budget day you came out and you calmed the market about your exposure to Adani group of companies. Uh, any update on that? Any update in terms of the debt repayment, loan repayment? Is everything as per standard account?
Yeah, everything is standard. They are maintaining their repayment obligations, and what they have indicated, the major challenge which was apparently seen by the various players in the market was essentially relating to the loan against shares. And as I sense that they have already repaid the loan against shares, and of course these loan against shares were essentially raised from either from the NBFCs, or they had raised these loans against shares from the international banks. So I think as far as we were concerned, we had not extended any loan against shares, uh, but they are maintaining their repayment obligations. And as far as the cash flows are concerned for all their entities, there is absolutely intact. Rather, there is no challenge. Whatever is there for the loan book of the banks, as far as this particular group is concerned.
So your exposure to Adani group of companies was less than 1%, which is well below the threshold limit. Would you be okay to increase your exposure to Adani group of companies if there is a need arises?
I think for the time being, we'll have to wait and watch as the situation stands. But I believe as of now, they are more into the. I think they have not really approached us for any kind of increase. So it's the question is not there at all. But I'm sure whatever repayment is happening, they are maintaining their repayment schedule. So we'll evaluate uh, the proposal as and when it comes, because when it comes to lending, as far as banks are concerned, we lend against the assets, and also we lend on the basis of the cash flows, which are very evident. So we will make very, very clear assessment, and based upon that we'll take a call.
Such a brilliant point. I remember Mr. Khara came out and clarified which stemmed the stock fall in Adani group of companies. I'm just sharing with our viewers that SBI and bankers, they lend against cash flows and against the assets, not against the equity price. So what happens to equity price is secondary market operation, not what something banks are bothered about. So we should not connect the lenders here and assume that what's happening in a group of companies, equity stock valuation will have impact on the stock price per se. But Mr. Khara, there is one concern at a global level which is now coming up, and that concern clearly is surrounding around 81 bonds. How do you see the implications of that would be for banks like SBI?
Well, of course, this concern has been there for quite some time, but what we have witnessed is that last year, apart from the concerns, even there were some valuation norms also which were a cause of concern. But nevertheless, we have observed that for well-managed, well-rated banks, we are getting enough demand for 81, and this year itself, we have raised more than 15,000 crore during the financial year 23, and we have raised it at a very, very competitive pricing. So I think that is a very clear reflection that 81 investors are looking for the quality paper, and once they have got a confidence, they are willing to pick it up too.